Hello everybody and welcome to my monthly Vietnam update. In August, the Vietnamese benchmark index posted a gain of 4.1% in US dollar terms after a sharp fall in the first week of the month. The AFC Vietnam Fund also had a positive month, with its NAV rising by 1.9% to $3,450 according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel in order not to miss any updates. Thank you. In August 2024, global financial markets faced significant turmoil during the first week of the month, primarily driven by growing concerns over the health of the US economy. This uncertainty sparked widespread sell-offs across multiple current countries, exacerbated by the unwinding of the yen carry trade strategy, a long-standing approach used by investors to capitalize on Japan's low interest rates. The yen carry trade allowed investors to borrow at low interest rates in Japan and invest in assets with higher returns, such as US technology shares. However, the strategy began to unravel at the start of August when the Bank of Japan unexpectedly raised interest rates and signaled that further increases were likely. This prompted investors to sell off their US assets to repay the Japanese loans, causing a sharp decline in global markets. The S&P 500 dropped by around 8%, while the Euro Stoxx 50 declined by around 6% in the first 3 trading days of August. Japan's TOPIX, the Tokyo Stock Price Index, experienced a staggering 20% decline, representing its largest 3-day loss ever. Unfortunately, the Vietnamese market was not spared from these global turbulences, with the benchmark index also declining by around 4.2%. This sharp global downturn underscores the interconnectedness of financial markets and the far-reaching effects of economic uncertainties, emphasizing how shifts in one part of the world can ripple through economies worldwide. The global market downturn in early August turned out to be a short-lived correction, as most indices, including Vietnam's VN Index, rebounded sharply. After initially losing 5.4% during the first week, the VN Index rallied by 8.4% by the end of the month. This recovery was fueled by a combination of solid fundamentals and favorable market economic conditions, underscoring the resilience of the Vietnamese market. The strengthening of the VND also supported the Vietnamese stock market, as expectations grew that the Federal Reserve might soon cut interest rates due to signs of a slowing US economy. The US dollar index dropped by 2.6% in August, leading to a strengthening of the Vietnamese dong by 2.2% versus the US dollar. This trend could accelerate if the Fed begins rate cuts in September and continues through the rest of the year, further bolstering the Vietnamese market and the AFC Vietnam Fund. Vietnam is set to embark on its next growth phase, driven by impressive macroeconomic performance in Q2 2024, marked by a record GDP growth, strong industrial production, and a resurgence in exports. Significant gains in tax collections stemming from rigorous anti-corruption efforts have strengthened the nation's fiscal position, allowing for increased public investment in infrastructure. Under the leadership of the new party Secretary General, To Lam, there is a renewed focus on political stability and economic growth, ensuring that Vietnam's momentum continues and the foundation of sustained long-term expansion is solidified. Vietnam's resilience is evident in its long-term growth trajectory since the Doi Moi reforms in 1986. Despite challenges, like the Asian financial crisis, the global financial crisis, and COVID-19 pandemic, the country has consistently posted positive growth. The recent upgrade in the Vietnam-US relationship to a comprehensive strategic partnership, alongside other significant free trade agreements, positions Vietnam for further economic expansions, with record high FDI, export turnover, and GDP in 2024, coupled with an ambitious infrastructure plan. Vietnam's heavy public investment package is playing a crucial role in supporting economic growth and boosting small and medium-sized businesses. Over the next 2 to 3 years, the completion of the 2,000-kilometer South-North Highway network is expected to accelerate economic expansion significantly. In August, the Prime Minister approved an ambitious master plan to expand Vietnam's highway network to 9,234 kilometers by 2050, setting a new national record and laying the foundation for sustained long-term growth across the country. Vietnam is set to solidify its status as one of the fastest growing economies in the region, with forecasted annual growth of 6.5% through 2034. The government's commitment to economic growth and anti-corruption under To Lam's leadership further underscores Vietnam's bright prospects in the coming years. As Vietnam enters in its next growth phase, the AFC Vietnam Fund is strategically positioned to capture emerging opportunities and enhance fund performance. Our focus remains on sectors with strong growth potential over the coming years, including export consumption and public investments. Since April, we have witnessed a price surge in stocks within the consumption and export sectors, driven by impressive Q1 earnings that initiated a recovery. Particularly LBM, one of our largest portfolio holdings, also experienced significant gains in May, June, and July. Additionally, our investments in other high-performing sectors such as TNG and TLG have paid off, as these companies saw their net profits recover and surpass all-time highs. The impressive stock price performance of TNG and TLG have been instrumental in boosting the overall value of the AFC Vietnam Fund portfolio. As we have highlighted in our previous report, the sectors of consumption, export, and public investments are not merely short-term phenomena, they are integral to Vietnam's long-term growth trajectory. These sectors align with the Vietnamese government's consistent emphasis on them as drivers of sustained economic growth. Recognizing their importance, we have strategically decided to increase our allocation in these areas to capture the nation's anticipated growth over the next 5 to 10 years. Vietnam's current achievements amid global turmoil demonstrate the country's resilience and potential to reach new economic heights in the coming decade. We have observed that Vietnamese stock valuations are currently at attractive levels, which may change soon. The potential upgrade of Vietnam from a frontier to emerging market by FDSE could occur as early as the next year. Currently, the Vietnamese Ministry of Finance is finalizing a crucial circular regarding pre-funding, which, once issued, would address the main obstacles to this upgrade. As the countdown to the upgrade begins, we are preparing to take full advantage of this opportunity. We want to ensure that all of our investors are aware of this potential shift so they can benefit from what we could be a significant market development. Well, this is all from me. Thank you very much for listening, and you're going to hear from me again next month with a further update. Thank you and goodbye.